trading software platform, which gives systems and indicators uncommon resilience. Now, John is also the author of 4 Steps to Trading Success, using everyday indicators to achieve extraordinary profits, and that was published by Wiley & Sons back in July of 2001. Dr. Clayburg also speaks at several system development and trading seminars from New York to Los Angeles, and works with clients from around the world in the development and implementation of self-adaptive trading systems and indicators. And with that, folks, please join me in welcoming Dr. John Clayburg to the Trading Pub and his topic today, which will be creating and trading self-optimizing automated trading systems. So with that, John, the floor is now yours.
Well, thank you, sir, and thank you to the Trading Pub and all the associated individuals who make this possible. It's indeed a pleasure to be visiting with you people today. Just a little bit in my background. I graduated from Iowa State University in 1971 with a degree as a doctor of veterinary medicine. Practiced till '85 until the egg economy fell apart, and my wife and I decided to raise our 4 boys and a girl on the family farm rather than move to the cities or whatever. And one thing led to another. We got involved in marketing soybeans and cattle and corn and so on, and got interested in markets, got some charts, got a computer, got a trade station, taught myself how to program in easy language. I've never had a programming course in my life, but I just figured it out. That's not the way to do it, by the way, but that's what I did. And that's how a veterinarian in Iowa comes to teach trading stuff to people. So I've done seminars all around the world. The latest one's been in Singapore and some in Paris, London, Frankfurt, Berlin, and so on. It's been interesting, and I really enjoy doing it. And with that, we'll get on into the presentation. What we're going to talk about today is creating and using self-optimizing automated strategies. Now we're looking at a situation where I do all my trading as automated systems. I'm not a very good discretionary trader for a lot of reasons. I think a lot of it's a scientific background, and I've got to have everything 100% proper before I'll take a trade, and of course that never happens. But if you program everything, you can come very close to that. So I've been very comfortable trading automated trading strategies. And let's get through some of the legal stuff here, and then we'll get on with it. I am a commodity trading advisor. It is required that I present this disclaimer and a CTA disclosure prior to doing anything online or anything else. Just understand that you're going to see some numbers that have been generated for some automated trading systems, both live and in historical perspective. Well, the live stuff is obviously happening right now. The stuff in historical perspective has been created by backtesting and has the obvious advantage of 20/20 hindsight and all that stuff. But just so you remember and so you understand that some of these trades, some of the numbers you see were from hypothetical testing. Although most of those trades have been taken, let's just consider everything as hypothetical. Now, it's not only required that we do this, but I think it's a good idea. I don't want anybody to have any unrealistic expectations or any misunderstandings that this is exactly what you're going to get, and this is the way to make all your money. And it's an ATM machine, and let's all go retire in Tahiti or somewhere. It's not the way it is, of course, and this is just one more way of effectively trading. It works very well for me, and I look forward to sharing this with you for the rest of the day. The next hour. Material presented here in this online webinar is protected by U.S. and international copyright and intellectual property laws, meaning that it doesn't mean a whole lot. Actually, what we're doing is saying here, you're free to encourage to use all this information for your own personal use any way you see fit. Redistribution and selling or giving to anybody else, we kind of frown on that. So that's the only thing we're asking here. But you guys can be sure use this any way you want to use it. All right, we're going to present today. We're going to do some teaching for a while on creating and using self-optimizing automated trading strategies. And from time to time, we're going to show you some live trading going on, because the system is trading live behind this chart, these slides, and we will be able to take a look at that live here pretty soon. Cam, I should mention here that the way my setup is, I'm not able to see the questions or anything coming into the webinar, but if you could keep an eye on those and give me an idea at the end what questions that come in. We'll try to take questions at the end. I'm going to try to cover quite a bit of material, so we will be taking questions at the end. I can't see these questions right now the way this thing is set up, so we'll have to live with that as it is. Before we proceed, consider that when trading using technical analysis, we're effectively attempting to mathematically predict human behavior. All trading on a chart, all bars on a chart, all the prices and so on are the result of human behavior, whether we're picking up the phone, calling a broker, whether we're pushing the button, whether we're using an automated system. It all boils down to human behavior. And I've got a nephew who's a psychiatrist. He said, if you can ever get down to where you can mathematically predict human behavior, let me know. I could use that in my practice. So remember that we're not working in a world of absolute certainty, but a world of probabilities and possibilities. Everything is based on probabilities that I do. And although I've got a fairly simple system to follow all this stuff, the implementation of it does get a little complicated, as you'll see, but it is a fairly basic system. And if we get up, and the reason I mention all this, if we can get up to the 60, 70, 75% accuracy rate, that's as good as you're going to do, because remember, we are trying to mathematically predict human behavior, which is obviously not easy. What I want to do today is explore an automatic strategy routine that automatically changes critical strategy parameters, keeping the system in sync with current market conditions. Now, you'll notice frequently that people who use automated strategies like this principally because every trade executed is precisely as designed by the program. Every trade is exactly the same. Well, on this chart, this is a chart from a while back, but all of the trades on here are calculated using exactly the same way. Every trade is treated exactly the same way. It's all created by the same parameters and so on. Just for those of you who may not have seen a TradeStation or a multi-charts chart, the little red arrows pointing down are sell signals, the small blue arrows pointing up are buy signals, and you can see the progression of the trade throughout the day. The indicator at the bottom is one I created to track the progress of the trade. I call it equity curve today. The blue line actually traces the live P&L for each trade throughout the day. The yellow line is the maximum you could have received at any one point. You can see here on the day to the left, we probably made around $200. On the day on the right, we made right at 600. This is just a couple of days. You're not going to win every day, obviously. That's not the way it works. Just to give you a little bit of an idea of why we use automated systems. Everything is done automatically. Don't have to sit here and watch a dozen different rules, chart patterns, and so on. This takes care of it all by itself. Now, it's not something I always tell people that automated systems do not necessarily mean unattended. It's necessary to be here to watch what you're doing, make sure your computer stays up, make sure the internet stays up, make sure your platform is open, and all the things that you got to do to have it ready. And there are times when you do want to block off trading. Well, we didn't trade yesterday during the Fed announcement, so I shut it off for a few minutes. I mean, these are the kind of things you need to be there for. This is not a system you can turn it on and go play golf and come back and expect to see how much money you made. It's just one more way of making it a little easier, making the trades come out the same each time, and so forth. Just so we all understand kind of what automated systems are all about. Now, while this is very useful, this attribute is very strict in its application, leaving no room whatsoever for adaptation to changing market conditions. This is obviously a fixed parameter system. In this presentation, I'm going to demonstrate in detail how fixed variable systems fail to perform consistently over time as critical market parameters change ever so slightly. You don't have to have much of a change in the market personality to cause a change in the results of your system. And for that reason, a fixed variable strategy usually performs well for a given period of time and then will slowly reduce its returns as market personalities naturally evolve. System eventually become profitable again as the market cycles back to the conditions present when the strategy was developed. How long is that going to take? Well, that's the problem. Unfortunately, the non-productive period for a strict fixed variable system usually becomes intolerable for all but the most well-heeled trader. When its time rolls around again, usually our original strategy has been long forgotten or dismissed as non-productive or useless, when in fact it has come back into favor and is working fairly well. So it makes it a little bit difficult to manage system. This is probably the biggest knock on systems, is the consistency between various systems and various market conditions, depending on the situation in the active market itself. Just for an example of how this works in real time, and I've seen this so many times with so many traders. This is just a typical chart I picked to give you a feel for what happens when you're actually trading a system. First off here, the first 500 trades is, holy cow, look at this. Making money like hand over fist. Let's go trade the yacht. Let's take vacation. Let's buy a new house. Let's do all this stuff. Everything's looking pretty fancy, pretty cool right at the beginning of the time using the system. Time goes on and we're looking at this and say, hey, you know what? This is we're not making new highs as often. We're not doing as well as we did. What's going on here? Is this thing getting tired? Is it going to break down? What's going on? And pretty soon we get into a little deal like this and say, oh crap, it's busted. The system is gone. It's never going to work again. I'm scared to death. I'm going to stop trading this system, Martha. I don't want any more to do with it. This thing's going to lose all the money we made. Let's just get out of it. Well, not very much later. Oops. Should have stuck with it. It's doing well for it. Doing well now. That is the typical sequence that people go through on a system. I can tell when the system is about ready to turn around and be profitable again, because a lot of people call me and say, what's wrong with the system? How come it's not trading? I'm going to quit trading this thing. I says, don't do that, Harvey. We got to be able to stick with the system, but they all quit. So what do? Let's try to fix it. Now see where that purple arrow is there, purple down pointing arrow. Going to delve into that section a little more closely. Now, when one static system falls from grace, there's another one somewhere that has arisen from an earlier similar fate to once again be quite productive. So let's demonstrate this here on the chart that we just left. Here's our problem area on the chart that we just looked at. This happens to be between January 22nd, February 3rd, earlier this year. We went through quite a drawdown there. We went from probably $20,000 down to maybe $19,000 as the trades progressed, which is kind of a nasty drawdown. This happens to be on an 89 tick chart. Now, let's look at the 110 tick chart, which you got to imagine is not much of a different chart deal, but 110 chart fit the market better during that time frame than an 89 tick chart. And the fact that it's an 89 or a 110 or the YM or whatever isn't critical at all here. These charts are just to illustrate the problem in that at some point one system will work better than another, and those systems will switch back and forth. One will be profitable, one won't, and the next day they'll change us back just the other way. Here's our 110 tick chart with the same time frame. You can see here we had a very steadily advancing market. It looks pretty good. Time frames are all the same, but 110 tick chart on the exact same system did a better job than the 89 tick chart. Let's look at these together. This looks a little cockeyed, but I did slide the bottom chart over just so we can line up the time periods. I notice that the time frame is a little a little wider on some charts due to data compression and due to the ones at 89 tick chart, ones at 110 tick chart. But you get the point here. The 110 worked and a point where the 89 didn't. And if you look just prior to that, there's other areas in there the same way. If you look over toward the left part of the chart, you can see where the 110 had a dip when the 89 did work pretty well. So just keep this in mind. The whole thing we're looking at here is the fact that systems do vary significantly in their response to time frames, wars, politics, interest rates, rain, you name it. Depending on what you're trading, it's going to change the personality of that market. The whole challenge here is to keep your automated system in sync with the current market conditions and have, at the end of the day or at the end of the year, have a profitable experience for your trading. Now, wouldn't it be interesting if we could develop a series of fixed variable systems that could be useful for each of the many market scenarios and make up the ever-changing market cycles? In other words, how cool would it be if we could pick out, say, we're going to use 25 as an example. How cool would it be if we could come up with a system for each one of these scenarios? For example, let's assume that we could identify 25 separate market conditions that would encompass most of the general market activity observed over a fixed historical period, or any period for that matter. Let's further assume that for all these 25 examples, we could develop a profitable, separate fixed variable system for each of these 25 separate conditions. So for every kind of condition you could come up with, we just arbitrarily pick 25. Let's say we look at all these different systems, different time periods, different situations, and create a system for each one of those. Then all we need to do to be a successful system trader would be to apply the proper system to each market phase that come up. Pretty easy, huh? As I like to say here, simple, huh? Well, obviously it's not. Not so fast, Sherlock. How the heck do we figure out which system to use just when the market is rolling into one of our predefined conditions? How do we tell when one system takes over from the other? We've got 25 systems we're following. How are we going to know when we go from system 6 to system 9, from system 9 to system 3, from system 3 to system 22, and then 25, and then back to 6? How do we do that? Well, here's how I do it. This is the whole presentation here. You can see that we've got on this chart, we're working, in this particular setup uses 25 separate subsystems. This chart represents just 9 of these for clarity, just for simplicity's sake. If we showed you all of these, it really doesn't, it gets cluttered up, and when we're trying to explain these things, it just doesn't work quite very well. But you can see the arrow over to the right in the center part of the screen. There's an arrow there indicating that system 6 of the 9 is the only one profitable today, and it happens to be the one that's being used by the automated system. The system 6 is the only one of 9 of the systems that are profitable on this chart today. Our automated strategy, the lower right-hand chart, has picked up that chart and is trading the most profitable strategy all day. And so far, it's keeping track with it as we've got it set up here. Now, this is taking about 9, 10 o'clock in the morning. But if you look here, if you look at System 6 in the lower right-hand corner, down toward the bottom, there's a number down there. It says 375. Well, that's made $375 today, same as has the System 3 or System 6. Now, if we look over to the very left, you can see that $325 is our total for System 6. So on this day, on this chart, we're running 9 systems live. And we have an automated strategy, automated sort routine that actually sorts through all these systems and trades the one that is doing best at the time. Well, I'm going to pause this here, and we're going to take a look at some This is system slide 41. I want to look at a live trade here going on today and see how we're stacking up. And that's just my presentation here. Here is the 2300 tick system that's actually running. You can see the system is running live here. We started out long. We went short. We started out long with system 16. We went short on 16. And then we went long on system 9. You can see this where these, open this up a little bit. These things are labeled. We're using, we went with system 16 got us long, system 16 got us short, got stopped out. Now system 9, which is taken over as a leader, has taken our long position here. Now if we look over here on this chart, on the chart on the right, this is a live graph of what each of the 9 subsystems is doing that we worked on here. And I can open up a data window and make this a little more clear. Here's the data window. If you go clear here to the outside, you can see that, I think this should keep up in real time. Yeah, it is. You can see here that System 9 is making $325, $300 right now. You can also see that all the other systems, systems 1 through 16, now we're only using 16, these last are just spares for another, perhaps another strategy. All the strategies are working to some degree. System 3, System 9 here is up 275. System 10 is up 75, 50, whatever. Now these are all live system trading. For long here right now we're down around $300. Some days it works, some days it doesn't. We'll see how this obviously works out for us later. Now let's look at a couple more. This will let me be in multi-charts. There's a system we're running, I think just 9, it's a 5-minute system. I have 9 charts on this one. Let's go to the 2-minute. Here's our 2-minute system running on the ES. This happens to be the live trade. We're using system 1 on both of these. We were short, got reversed on system 1. To be long right now, we're up $150. If we want to look at what all the subsystems are doing, here they are. And over here's a little graph that's showing us what's going on. Here's a 3-minute system, same kind of a deal. Here's a 5-minute system that just now bought. We just now got a buy signal on system 5. Picked up on, actually we're using system 9 here, and we just went long. That's, see if this is going to touch it. We just went long at 2002.50. Well, it seems odd to say 2000 in front of the ES. Well, these are all ES systems. So these are systems that are actually trading live today. I want to give you a quick look at this, and then we can go back to the actual presentation. But this is what's actually going on live, and we'll take a look at this as time permits or as we go along. So let's go back down here to slide 40 something. Here's our slide depicting that system. System 6 is the only one of the system profitable today. Similar to what's going on today. We've only got 1 or 2 systems that are working very well. Well, let's compare here. Let's compare how much difference there are in systems on a daily basis. If you remember on this previous chart, we have 9 subsystems. Here's subsystem 1 and subsystem 2. These are performance reports going from February 14th. They're going actually from January 15th to February 14th. There would be a month's worth of data here. Now let's look at the first couple of days on the chart. You can see here system 1 On this day, it made $725 on 3 trades. System 2 made $487 on 2 trades. Now, that's not too bad. We'll take $487. I'd a lot rather have $725. On this day, System 2 is making $487. System 1 is making $725. The following day, System 2 makes $525. System 1 makes $175. All right, they're both profitable. Yeah, we could have done okay trading either one of these. Thing is that we're so much better off if we can maximize our profits on each day. Wouldn't you rather trade System 1 on the 14th and made $725 and then traded System 2 on the 13th and made $525? Well, that's what this system does for us. Let's go down here and look at the 5th and the 6th. You can see on the 5th, this even gets a little crazier. On the 6th here, System 1 lost $500. System 2 made $450. That's almost $1,000 spread. Same day, just the opposite. System 2, which made $450 the day before, only makes $187. System 5, that lost $500 the day before, made up for it by making $637.50. Again, notice the difference just from day to day. And you'll see these differences minute to minute, hour to hour throughout the day as well. And the system will change parameters, change the live system as it requires, as is required throughout the day. We can change systems back and forth several times each day, just to keep in sync with the current market. And on the 24th, we got the same kind of a deal. Now on the 24th, they both did pretty well. $1,112 on $1,212 on System 1, almost $1,000 on $987 on System 2. Get on the next day and made $1,300 on 2, $625 on 23. Granted, each one of these is okay, but again, you'd rather trade System 1 on the 24th and System 2 on the 23rd. Let's look at one more down here on the 17th, where it made $450 on System 1, and we lost $500 on System 2. So you got to admit there is a significant difference. Now, these are just two systems. I've got one system on the Russell that looks at 35 of these, because the Russell's a lot more volatile system, a lot more volatile contract, and it does trade back and forth quite a bit more often. And its personality changes more often. It's a lot more volatile market than the ES. I like them both. The Russell is more of a racehorse, or the ES is more of a turtle race when it comes to performance of systems and volatility and so on. There's a place for each one. It depends on your own personal trading style and so on. If we look at the graphs for System 1 and Subsystem 1 and Subsystem 2, this is just an equity curve. You can see it on Subsystem 1, we made probably right at $7,000, and Subsystem 2, we made a little over $7,000. Now, granted, there's not a lot of difference. We could have run either one, both of these, the whole time, either one of these, and probably done all right. But if we put them together, it just comes out to be that much better. Now, here's a breakdown of the Subsystem 1 and 2. We had Subsystem 1 had 78 trades, and the 2 had 68 trades. Made $83.65 per trade on Subsystem 1, and number 2 did $115. Just to show you they are fairly similar. But if you combine the two together, remember the first separately they made around $6,000 to $7,000 apiece. You put them together, they make over $10,000 on the same time frame. They run 115 through 214. So being able to pick the live system that day is going to be a big advantage for you. Here are the actual system results from those days. Oops. 6,500 on System 1 and 7,850 on System 2. Again, look back at the previous graph, over 10 grand with the systems all going together. I just added up the cumulative for each best system and graphed it over here to the right. I did this in Excel, which I'm sure you've all done. Here is a live graph. Some of these charts were done a while ago. When we do these charts, and I say we, I said everybody that presents these, I'm sure does it the same way. It takes hours to make up one of these slides. So we don't do them all new for every presentation. Now the charts you've seen here I did earlier this year for previous presentations. This, however, is a screen capture I took last night of yesterday's systems on multi-charts. And you can see that, and yesterday was Fed day, so it's kind of a crazy day, but even then, the system did well, even though a crazy kind of Fed day. And you can see we had one system here, made over $500. We had the top system made $500 that day. The bottom system lost $850. And we were scattered out in anywhere from 425 to 275 up to 162 to 550 down. Again, but this is yesterday's chart illustrating that even though we are, some of the charts did come from some time back, we are still able to maintain the performance as time goes ahead. Now, if you really want to drive yourself crazier, sometimes you have to be crazy to do this stuff. This is a system that follows 25 charts. What is it? 25, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, about 15 or 20. This is what goes on actually all day. You saw a little bit of this starting out as we looked at the live charts a few minutes ago. Each one of these is a live, real-time plot of the return of each of our subsystems. Now, before I got this all automated, and I've been working on this since I started working on this strategy, this routine in 1998. I presented the first time I presented this was at Trade Station World in Las Vegas and Caesar's Palace. First time I spoke at a big meeting and a programming technique, and I'm not a programmer, I'm a veterinarian, and the people are like, what are you doing here? What's this farmer veterinarian from Iowa doing coming over to Vegas to teach people how to trade? A little nervous, obviously. Talking about a programming technique, and looked in the back of the room, and a guy named Tom DeMark walks in. I don't know if you guys know Tom, but he was at that time and still is probably one of the premier system development, programmer, trader, so on, people known worldwide. I'm thinking this should be interesting. And I got through it, and about halfway through he walks out, and I figured, yeah, so much for that. Got done the presentation, he's waiting for me outside the door, says, you got to tell the world about this. He said, let me introduce you to somebody. And he took me over and introduced me to his publisher from Wiley Trading, and then I wound up, short story is I wound up publishing a book on this stuff. Just kind of a story of how this all got started. I did start I've been working on this since 1998. Previous to this time, I was only able to generate a chart similar to this, showing what each subsystem had done. It was up to the trader then to say, okay, well, right here, about 1333 yesterday, 1303 yesterday, that yellow system is the best one, so I'm going to trade that. And then it comes down about 10 minutes later, 313, well, now the blue system failed. I gotta switch over and trade that one. Then the yellow one takes over. Then the blue one takes over, and then the yellow one, then the white one, then the blue one again. And these guys were going blind, and their eyeballs were turning square, and they were bouncing off the table. And along with mine, I was trying to trade it that way too. It worked okay, but at the end of the day, you feel like a wet dish rag. You've really been run out. Well, now this all happens automatically. I just wanted you to see this slide to give you a bit of an idea of the historical development of how this came about, how it works, and what the automated system actually does for you. And like I say, this is a real-time performance matrix, but this is also good to point out a couple of things. When you're trading this thing, don't expect your end of day total to be exactly what the top system is at the end of the day. As you can see here on this chart, the leading system changed multiple times throughout the day. You can see we traded the white and gray one at the top, we traded the yellow one at the top, the blue one went to the top, the red one went to the top, then back to blue, then back to yellow, then back to red. And so we're switching back and forth all the time. Hopefully, the idea being that we can grab onto the lead system, and we can have one system just take off and leave the rest of them in dust and trade that all day. Now that can happen once in a while. More frequently, you will change systems like this. So obviously, the top system here made $962 that day. With this many changes, you're not going to make $962, but you're also not going to lose $750 like blue did on the bottom here. The whole idea is to make things a little more steady, a little more easy to stomach throughout the day. Now we talk about changing systems. How do we do that? Do we actually stop one trade and start another trade? No. Look at, and I can show you a lot of the details. By the way, we're having a 3-day seminar coming up. I'm going to go through this all in a lot more detail, and we're going to actually watch a trade live for a couple of days. But what we'll do, let's say let's say when the blue system took over from the yellow, I know they weren't looking at this. But let's say that the yellow was also was the leading system and blue took over. It was also long. Let's say yellow was long and blue took over, it was long too. We just had a better deal going through. Well, if we're already long, we're not going to change. We're just going to stay long. Let's say we go from system 10 is a good one, then we go to 15. It's long too. System 15 might be the best, but if it's also already long, we won't have to worry about it. So we'll just go ahead and trade that. We'll only trade when it changes positions. And that's a little difficult. But this is what we deal with every day, and only we do it automatically. Now let's look at a system here that traded some time back. This happens to be our 2300 system, 2300 tick S&P system that we're just looking at. Starts out here at the left part of the chart. Subsystem 1 took off. S1, you see S1, S1. That means S1 is a sell signal, and S1 is also subsystem 1. So we shorted that at that point. Came down here, and we hit a 5-point target. That's built within the standard between the subsystems and the global variable system, the main system. Next things that happen, system 7 takes over. System 1 is short, system 7 happens to be long and doing very well now because system 7 probably got in at the base of that part of that chart that looks right in front of you there, in front of this. So we bought from system 7 at this point. Turns out that's a loser. So we go back on, and now we're taking system 3. System 3 is short all day, and this is the kind of the ones we want to catch. Now system 1 got a short for a while, now system 3 got a short. We hit another target down there. Don't have it marked, but there's another 5-point target. Then we went back to system 7 to trade the rest of the day, hit a target, and then system 7 reverses, still being a lead system. We follow system 7 for the rest of the day. And there are the prices at which we made this thing finally bottom out. I'm not sure how many dollars this made today. It's not really important, but we follow. This is how it works. We made 1, 2, 3, 4, 5 different changes here. 1, 2, 3, 4, 5 different changes from one system to another automatically throughout the day. We wound up having a pretty good day. And it's a fairly decent trending day, but it did get kind of choppy toward the end, so we made that work fairly well. Here is the subsystem graph that we used on this day. We're only using 16 systems here. But you can see here the dead line in the middle shows us that at 9:46:39.996, we break the time down pretty carefully here. That subsystem 3 was the best performer at 9:46. Now, if you'll recall, we go back up here, and you can see that we went short subsystem 3 at that time. And as time goes on, we can go ahead and use the different time frames. Now, you can use this one, and if you want to use this to discretionarily trade that, you sure can do that. But it's a lot easier if we automate the whole thing. Another thing that I really do like about this strategy, this setup, is that on a day when all the subsystems have not performed well, if you look over at the lower left, you can see that every one of these systems is not doing well. The best one there lost $580. Well, that's not doing very well. There's a filter in here that we have to have a certain number of the subsystems being positive before we'll trade at all. But we don't have to trade every day. We don't have to trade everything that comes up. If we have a day when many of the subsystems are not doing well, that will throw up a flag, and then we will not have any trades that day. If it should turn around and the subsystem should come back, it can kick in and trade. But I can tell you right now, it's not going to do that because these systems, these minus 840s, are all full stop outs on the two on the 2-lot system that we're trading in the ES and all these subsystems. So on a day like this, it's not going to trade. And you can see why. Look at that day up there. The biggest problem, the biggest headache in system trading is the sideways day. And this is definitely a sideways day. We only had maybe 5 or 6 point range all day on this thing. It does happen to be a full day. So how do you trade these sideways days and make a profit on them when the trend following system has to work better in a trending system? Well, we don't have a trend today, so I just don't trade. I mean, I've got several indicators and several routines that attempt to define the trades and the trends throughout the day. I've got one that tries to define the trend during the first hour. It's called the directional day filler, and that's another presentation. I always tell people when I explain that indicator that it's convenient to realize and understand that you've got a trend. It's also just as convenient and just as important to know you don't have a trend. So if you see this and you have a good system that works well in the sideways market, you can use it on that day. Which brings up another point that you can do. Now, so far we've just used one system on one time frame to illustrate all our different subsystems. Now, there's no reason you can't use 2 or 3 different systems on 5 or 6 different subsystems and compare not only time frames but different kinds of systems, because we're just generating positions. If the thing says the best system that day is long, we're going to take that system. If it says the best system right now is short, we're going to take the short trade. It may come from a 5-minute chart of the ES trading a reversion to the mean system. It might come from a 233 tick chart of the ES trading a trend following system similar to this one. So the whole routine here, besides this revolving around global variable systems, is that we can use this to follow as many different systems as we want and switch horses in the middle of the day. You stop and think about, if you go back and look at one of these other charts we were looking at, like this one, for example. If you want to win this thing, let's say these represent horses in a horse race. If you want to win the race, the easiest way to do that is to jump on the lead horse every time he takes over. If horse number 6 is leading the race, you ride that one. If number 7 comes along and he runs around with horse number 6, you jump off of 6 and get on 7. Now, you'd have to be pretty athletic, obviously. This is what we're doing here. If you want to win the race, you keep riding the lead horse. And that's all this thing really does. It's quite a bit more complicated than that, but that's a general theory. Okay, why do we call these things? I'll tell you what, let's go back and look at our see if I got any questions coming in here. Do you have any questions yet? Has anybody seen anything yet? Having any trouble seeing all of this. So let's go ahead and look at our charts and see how these are doing. Here's the 2300. This is the tick chart, very similar to the thing we've been looking at right along. Oh, Julie, good question. We're going to cover that just very quickly here. Julie asked me, how do we get the 1197 tick chart setting for the ES? That's a complicated thing, but it's really not that complicated. So far today, let's just briefly review this. We started out with trading system 16. When 16 reversed, we went short. Now when system 9 went long, we went long. Right now system 9 is trading, that long trade is up $25. Now it's down 25, now it's even. And we're down $340 on the day on this chart. If we look over here, I'll actually highlight this chart, we'll see that system 9, which we're trading right now, is the only one on this chart that's positive, and it's only up 175. So this may not be a good day for the system. It may not work out, but we're not down Not as much as we might be if we were trading just one of the several systems. Well, let's look at the individuals and see how this looks. There it is. This is system 1. Here's system 9. So here's what our winning system is doing for us. And this is a good example of why you don't always get the same example. You don't always get the same return at the end of the day. Well, system 9 took off and did very well. It's still long. We're up 175. This is starting to look like a pretty sloppy sideways day, so maybe we're not going to work so well. Yesterday worked out pretty well. If we were up at one point here, we were up 575, and we actually ended the day up around 175, about where we are for the day. Stevie, did you do another set of tapes of a different industry? No. Different company, maybe. Yeah, I've got a voice that's kind of hard to hide. You can run, but you can't hide. So, no, yes, I have done. I've been doing these things for a long time, so you've got to do sometime or another. Subsystem 9 is the one that's working. It's up 175. So, how would you have picked subsystem 9 out of all these if you're just watching all these individual charts? I'm going to drive you crazy. Here's the rest of the charts. There's systems 11 through 16. You see none of these are making any money today. Go back here, only number 9 is making money. And as designed, our system is following system 9. I've also got a one lot system I'm looking at here. It should be just about half the same. Yeah, it is. This just trades a one lot. Some people don't like to trade two lots. I've got another setup here that's actually doing pretty well today. This just takes a look at the market positions of each one. Now the other chart that we looked at, the SYS 2300 system down here, actually transfers the entry parameters from one chart to another. But the market position only looks a little bit different. Now we've got a real sideways market here. Let's take a look at the 5 minute, see if it's doing anything. 5 minute, this is a 5 minute chart of the ES working on the same system. Look at this thing. Here are all the subsystems we've got going. Here's the real-time monitor for the day. See, none of these systems are working well. We've got system 5, which hasn't traded yet, which is fine. But these are the how many? We've got 9 systems working on the 5 minute chart, and it's hanging pretty tight here. We're still sitting here long. Let's look at the 3 minute. I don't think it's doing much better. The 3 minutes so far. This thing down below here is kind of interesting. If you look over to the right and left side, you see the maximum equity is 75 is 0. The low point on this chart is 250. Right now we're down 75 for the day. We're up we're actually flat on the chart. Here are the subcharts at power system 3. So you're beginning to see this can get a little complicated. Here's subsystem 2. Chances are on a short and slow day like this, system 2 might be doing a little better. Let's open this up. And why does system 2 work better on a day like there's a 2 minute? Why does it do a 2 minute chart work better on a sideways day? Because we get more bars and we can get more chances to change direction. Now the system 2 happens to be up $150 today. And here is our matrix that shows us what our different subsystems are doing. This is a multi-chart, so we got a little bit different of a setup, but you can see on the right side, systems 10 through 15 are all running. All the 2 minute systems are doing pretty well. Now system 15 happens to be the one that's working the best. So let's go back and look at 15 and see what that did. 2, 5. I didn't sort these out like I should have. It might be in here. You can see how this has been working fairly well. Caught a short, caught a long, and now we've gone back short, which is a typical thing to see in a sideways day like this. But there's a number 2 system that's trading fairly well. Up 125 bucks. Not a big deal today, but that's how it's working. And Mandeep is asking me, how much capital do we need to trade this system? What capital requirement to support trading all these systems together? Mandeep, I think you're asking me, what do I need? How much money do I need to trade this? If you're going to trade, depends if you're going to trade a 1 or a 2 lot. Now you got to understand that we're looking at 25 or sometimes 30 or 40 different systems. They're all being boiled down into one chart. You only trade the one chart. You don't trade all 25 of these. I've got an automated routine that automatically monitors all of the progress of all these charts. Let's go back and show that again. What the automated system is doing is watching all of this and trading the best one. We've got here the system system 12 that has actually topped out and is up $600. Now right now the system will be trading system. We have one system here is making 400 bucks today. It's happened to be system. What is this touching? Happened to be system 10. The basic system now, the whole system is trading system 10. It's not trading anything else. And it's probably only trading a 1 or a 2 lot, depending on how you want to set this up. You do not have to trade all 25 or all 18 of these, in this case, 18 of these systems to make this thing work. You just trade one. We're monitoring all 18, and then we're having a automated routine go in and sort the systems top to bottom. And we're only going to take signals for the actual live trading that you're doing. We're only going to trade systems. We're only going to trade the system that's the best that day. We're only going to trade the base chart that gives you the best trades for that day. Now, typically, if you're going to trade a 1 lot of the S&P, I think some brokerages are anywhere around 500 bucks for a trading account for one lot. If you want to trade a 2 lot, you could theoretically trade a 2 lot on this thing for $5,000 or $10,000. Because you got to figure out you're not trading. If you're trading 20 systems, 2 lots apiece, you're trading 40 lots. I don't think there's too many of us like to trade 40 lots. So there's a whole. Just so we understand here, the whole deal is that we're boiling all this down into one pot. And we're just trading what boils off of that. Chris is mentioning here that there's election news about Scotland late this session overnight. Use the market for chopping. Yeah, that's probably what's going on, Chris. That's one thing about automated systems that you can't program in Scotland, Scottish elections. You can't program in Fed announcements. You can't program in unemployment reports and so on. In those days, sometimes you're better off just to leave systems alone. I like systems because of the way they work, but that doesn't necessarily mean that we have to continue to create them through those periods. That's probably what is going on. I usually shut it off for fundamentals. People ask me, do you trade the systems all the time? Well, normally not. I'll trade a system. I don't trade on the yesterday. We shut it off during the Fed announcement. Just too much volatility. Turned out several of them worked pretty well, several of them didn't. Now the thing about it is this kind of a system will not react that quickly. If you can have 3 or 4 different systems changing leaders in 2 minutes, we're not going to keep up with that because the bars may not form quick enough. It just doesn't even work very well. And I'm also getting the question, what is the annual rate of return on investment? That's one thing about this self-adaptive strategy that you don't like, and I don't like, but can't do much about it. This is called a global variable strategy. I use the global variable algorithms available both in multi-charts and TradeStation to pick up this data. Problem is, you can't really test this historically. You can't you can't generate a system report on the base system in the same fashion as you can a subsystem. Simply because it has to have real-time data. It has to pull all this data off the charts in real time, and you can't run all those 25 charts historically in such a fashion that you can pull that data off accurately. So with historical testing, there's a couple different ways you can look at it. You can look at the individual subsystems, and let's just pick one of these and do that. Which one was, let's just pick one. I don't have much data in here. There's probably only a couple of days worth of data, but we can look at it. Now here's 2 days on this chart. You can see we made 187 so far today. We made 775 yesterday. If we want to put some more data in here, I can do that. Let's put some more data in just to give you a hypothetical shot on what subsystem 1 would have done. We've got 2 days in here. Let's put in 30 just to make it so that it calculate quickly. And while it's doing that, I'll show you the other way. It's the weather forecast, which I don't need. Go to Clayburg.com. It's my site. And if you look over here where it says global variable system results, I update this every night. I didn't get it updated last night because I was finishing this thing up before the night. Go through the disclaimer, and it will take you to this page that will give you real-time trades since October 7th last year, almost a year now. I've got some directional data filter systems here. The GV2300 is the one that we're concentrating on today. The 2 and 3 and 5 minutes are the ones I'm also showing. What this table will show you is what these systems did every day. Now I'm trading these live. And when I go down, most of them live, some of them are, some of them aren't again. Just consider this is all hypothetical. But how I do this, I update this sheet every night. And you can see what, if you want to look through this, I think I can put this in here. There's a link to this page. You guys want to look at this at some point. But again, I have to call these hypothetical for the same reasons I mentioned before. But if you want to go down here, here we're getting into 14. Here is I've got everything here. First quarter 2014 is what we return for all the variable systems, all the various systems. Here's the second quarter for 2014. Here's a 2014 cumulative. Remember, these are all recorded real time every night. There's July. August was not a good month. We had several of these things, and August did not work very well for us. But, no, wait a minute. I'm way off. I got up here on us. August is missing here. I got to update this. August is in here. I just didn't do this properly last time I did it. Here's what we've done in September so far. Here's our September totals for the universal global variable systems, meaning the 2300, the 2, the 3, and the 5. We've made $11,000 so far on those 4 contracts. I'm trading a 2 lot on each one of those. So you can figure we've got a 2 lot. You can figure that whatever your margin would be on a 2 lot to trade all the way through there. But this and below that is obviously the links for the day's webinar. I do these on a spreadsheet and then capture the spreadsheet and put it on here. I didn't include August this time. So I have to do this a little different every night. So I've got to rework this one. But there's another way you can find out how this all works. Now let's look at our system here, system result. This goes back 30 days from today. This is happening to be on system 1. There's daily analysis. See what we've done each day. We can go to the strategy performance summary, make $2,400 in a month. We can look at the equity curve. I have no idea this is going to work. Here's the reason you trade different systems. Look at this. We didn't do anything. Let's look at the detail. Didn't do anything until about the tail end of August. We get into September, we had several really good days. August 29th through September 5th, we did very well. Other than that, we've been pretty sideways, pretty sloppy here, pretty sloppy here. But you can bet the system grabbed this and probably traded it those several days. But if you want an idea of what it's going to look like, that's how you can tell. You can look at each one of these different subsystems if you want. Total trail analysis, this is making 23 bucks a day. That's not very good. But if we look at our equity curve close to close, we had a really good trading period in here, and this was obviously offset by another one. Let's just pick another one and see how the offset would look. Let's just take number 2 for example. Let's put in 30 days here as well. It's going to trade real fast. Let's just see what it is. See what it's doing today. Just want to grind this all out, of course. And it's showing us we're up $450 today. That's pretty good on this chart. All right, let's look at the launch report. Well, that was a lot more steady. We had a day here that wasn't too bad. Remember how the other one was kind of the same way? This one has continued to perform pretty well. So pretty good chance the system 2 has been being followed pretty steadily right along. Look at trade analysis. Here's the list of each trade if you want to see that. Total trade analysis. Here I'm making $99 a trade versus 23 here. Now the system 1 had its day. See the detail here. And you can see that system 2 had a lot better day. Now remember, this is just the last 30 days. I'd almost bet you even money if they go back 30 days prior to that, it's going to be just the opposite. So the whole idea is to trade the best system, the system that's performing the best on the day that we're actually operating. Let's see if we can open up one more thing to show you, then I'm going to open up something else to see if we can show you some soybeans here. We can find out. Yeah, let's look at this. Soybeans are a terrific commodity to trade during the growing season. This is going to take a while to calculate, so we're going to go back here to the slides and discuss a couple of things. I get a lot of questions when I discuss these systems. Why call it self-optimizing? Because it really isn't self-optimizing. It can be called a misnomer if you want, but it kind of describes what's happening. And that we're using the best system. We are selecting a set group of subsystems and letting the thing pick from each one. And it's self-optimizing because it's going to trade the optimal subsystem automatically. Now, if we try to optimize every tick, that's obviously impossible. It takes sometimes many hours to do just one test. And we're testing 25 systems here, or 16 or 10 or 30, whatever happens to be the setup. So we can't actually do that. It's not practical. If we could do it every night, well, that's not really practical either, because there just isn't time involved. But my next question here from, I think it was Julie, was asking me, says, how do you select the subsystem settings? First thing to do is we optimize the chart over a number of different time frames. I'll optimize a 5-minute, a 2-minute, a 2300 tick chart, 1197 tick chart, and so on. Then I run it through, I do this all in TradeStation, then I run it through what you call a walk forward optimizer. This is a very selective thing, and that's another couple-hour presentation that we'll take care of on the 3-day coming up. I'll go through this all in detail, but the walk forward optimizer gives us a good look at which system settings and which optimization results are going to be the most robust as time goes forward. It actually tests the system in sample, and test it against the data you're testing it on, and we'll roll it forward and use those same settings on the next group of data that the system hasn't seen yet and see how it does. And the things you can get out of that are amazing. I did some webinars for TradeStation on this, and I really think this is going to revolutionize system trading. It certainly made everything I'm doing here work a lot better. It made it a lot easier to work on. So that's why self-optimizing. And Julie, I hope that answered your question. We're about out of time here, but why do I call this global variable? Well, there's a routine in TradeStation and multi-charts that allows you to harvest data from one chart, park it at a given memory location, and read that data back into any other chart. And that's how I'm able to read system data from one chart and then utilize it on another. That's a global variable system, and that name just kind of caught on, so I call these global variable systems. Now that's the only reason I call it that. It is global variable because we can monitor many different systems in real time. How are subsystems created and selected? Well, Julie beat me to that one, and we already discussed that. How does the automated selection process work? That is a very complicated thing, and again, something that we're going to discuss at our 3-day webinar that's coming up. I pull all this data in, we put it in a couple of arrays, we run it through a sort routine, bring it to the top, and then pull from that sort. We pull the entry point on the last trade, we pull the market position of the top performance system, and we perform the P&L up to the second P&L for each system, and then sort these out, and if necessary, send the change to the base system. We'll go through all this with you when we get done with this in the next time. Now, we're not going to make any offers today. We're not trying to sell you anything. I hope I've interested you in the world of both automated systems and the next step up on this thing where we're talking about automated, self-adaptive, global variable systems. It is the next step up in trading. I don't know of anyone else who's doing this. This is unique as far as I know, the stuff I've been working on for the last, 16, 17 years. Glad to explain all this to you. We will offer significant discounts at the webinar. If you'd like to lease this system for a month and try it, you can do that. If you want to lease it and then decide you want to buy the system, we'll allow you to deduct the lease payment from the actual purchase price. Day one on the 3-day seminar, this is all going to be next September 29th. It's on Monday, 8 a.m. to 4 a.m. for 3 days. We're going to, day one, we're going to go through all the detailed explanation and fill in all the holes of everything we didn't talk about today. I kept saying, what's this complicated? I'll go over this later. I'll show you more charts and so on. Now, it's going to take 3 days to explain all this in the detail that you're going to want to know if you are interested in using this type of a strategy. We will be offering significant discounts at the webinar. We will be recording the webinar, and we'll, just like TradingPub is doing today, we're going to send you a link for the recordings, and anybody that registers will get the recording. So it's a free seminar. There's no reason not to sign up for it. Nana just placed the link here again, so if you guys want to click on that link, it will take you up to a sign-up sheet, and you'll receive instructions as to how to sign up and so on. TJ, hello, I know you. Is TradeStation now as robust as multi-charts? Unfortunately, no. You see me using so much stuff on multi-charts. Multi-charts is a multi-threaded application, and TradeStation is getting there. I talk to those guys every day. TradeStation is probably the premier deal for the longest time. There's some people are catching up to them. Multi-chart does very well. It doesn't crash. Multi-charts is expanding rapidly. The TradeStation is coming up with some fantastic new stuff with optimizations that I just became aware of last week when I talked to my guy down there. But I think right now, here's the way I trade. That's a little complicated, but I use TradeStation to drive multi-charts, and then I've written a bridge, and I send my trades to another brokerage. It happens to be Infinity Brokerage to actually have the trades done. There's a lot of moving parts, but I trade with it every day, and it works beautifully. Let's look quickly at soybean systems. Here's my soybean systems. We made $437 so far on the 33 tick global variable soybean system. We've been short since we've been up here. Looking for here are the subsystems you want to look at. But once again, this time to work on soybeans. I like soybeans. I like the I like the ES, and I like the raw. So those are basically the three I trade. Although I will be developing this thing for use on any other commodity. So I would certainly encourage you guys to sign up for the webinar we're going to do in a couple of weeks. I think you'll find it very interesting, and we'll try not to. I'm sure I've probably run over some of you guys today because it is fairly complicated stuff. But my time is up. I would like again to thank the guys at TradingPub and for the opportunity to participate today. And if you have any questions, here's my contact information.
All right, well, that's great, John, and thank you so much for joining us today and for that actually fascinating presentation on the effort and the logic you've applied to the development of your automotive